where we are at the moment, obviously it has been China alone that's really been allowing its currency to move. Most of the other regional currencies have, relatively speaking, weakened a little bit, but nowhere near as much as the yuan has. However, if they start to see the impact of yuan weakness impacting into their own local markets because they're losing competitiveness, if they start to see their local equity markets come under pressure, then there will be a growing temptation for those nations to allow their currencies to weaken as well. I think it's interesting what's happening in Japan, for example. You saw the Bank of Japan intervening this morning, or threatening to intervene this morning, in the local JGB market, precisely to stop yields rising more than it felt comfortable with, and precisely, arguably, to stop money flowing back overseas from overseas to seek higher yields. So it seems to me that people are becoming increasingly sensitive, and if the yuan starts to weaken again, and the other guys out there will want to see their currencies weaken alongside it.
Simon, what would you view as ultimately more damaging to the global economic story right now? Would it be a tariff or trade war through tariffs, or would it be some kind of a race to the bottom with global currencies?
Oh, always hard to say. I mean, they're all kind of part of the same equation, but as a currency guy, I'm obviously going to focus on the currency story. And yeah, I do think a race to the bottom is dangerous because it's very hard to see who the winners can be in that sort of story. I think where particularly it's an issue right now is that if you look over the course of the last 5 or 6 years, one of the big concerns consistently in summer months has been whether, what's been happening with Asian currencies. Remember 2015 and the concerns about the yuan devaluation then. It can feed through into global equity unrest very, very quickly indeed. And historically, the last 20 years, August has been one of the more dangerous months for markets. So at the moment, we're kind of okay, but it's easy to imagine this uncertainty feeding into broader unrest in illiquid markets and feeding through into something rather more substantial.